The Silent Heist, How an Empire Became Accountant. Picture this, 1700. India controls nearly 1/4 of everything the world produces. Not through war, through craft. Bengali textiles so fine they're called woven air. Ports alive with merchants in a dozen languages. Gold flows in, not out. Payment for goods nobody else can make. Fast forward 247 years. That same land, under 4% of global wealth. Artisans vanished. Workshops silent. Fields exporting food while children starve. What happened wasn't a natural disaster. It was the most sophisticated theft in human history. And the weapon wasn't gunpowder, it was accounting. Welcome to a story where villains wore top hats, invasion became investment, and an entire civilization was strip-mined with ledgers, not explosives. When merchants became monarchs. Early 1600s. India thrives under the Mughals, 150 million people, advanced infrastructure, agricultural wealth feeding textile production. Indian cotton and silk are luxury before brands exist. Europeans sail months through storms just to fill their ships with Indian goods. India runs permanent trade surplus. Precious metals flow east, not west. Meanwhile, an island invents something radical, the corporate entity. In 1600, Queen Elizabeth charters the East India Company. It looks like business, investors, reports, directors. But here's the twist, it has sovereign powers. It can wage war, sign treaties, mint currency. While others negotiate as equals, the British innovate. They bring financial engineering, London credit networks, marine insurance, bond-financed fleets. They scale operations impossible for traditional empires. 1757 changes everything. Battle of Plassey, fewer than 1,000 British soldiers. But the real victory? The company installs a puppet ruler who grants them Diwani, Bengal's taxation rights. A private corporation just acquired the IRS. Within a decade, tens of millions of pounds flow annually from Bengal to London. Not trade. Pure extraction. London's markets explode. Bengal enters famine. The alchemy of theft. Here's the genius. Tax collectors sweep through Bengal, extracting revenue. Then company agents arrive offering to buy textiles, rice, indigo. Except they're paying with the money they just collected as taxes. The scam is invisible. Different people, different departments. But Britain acquires Indian goods at zero cost, re-exports them to Europe at markup, and pockets the difference. They're buying Indian goods with India's own money. This fuels the Industrial Revolution. Manchester's mills boom because they've destroyed competition, flooding India with British textiles made from Indian cotton, sold at prices no local artisan can match. Towns like Dhaka collapse. Weavers' guilds dissolve. Entire craft traditions vanish within a generation. By mid-1800s, India, world's largest textile exporter, becomes a raw cotton supplier. Finished cloth gets sold back to Indians at profit. Circle closed. 1770. Bengal famine kills 10 million. Company revenue increases. They don't stop collecting taxes or exporting grain. Bodies line roads. Quarterly reports look healthy. Crown jewel, bleeding wound. After 1857 rebellion, Parliament dissolves the company, establishes Crown rule, but keeps the machinery. The Raj introduces home charges, India's bill for being colonized. Salaries for British officials. Pensions for retirees. Interest on infrastructure loans. Cost of British troops stationed in India. India pays Britain for the privilege of occupation. Railways, Britain's supposed gift, are financed through Indian taxes with guaranteed 5% returns to British investors. If railways underperform, Indian taxpayers cover the shortfall. Risk flows down. Profit flows up. Annual home charges exceed £100 million by early 1900s. Accumulated over 2 centuries? Economist Yutsa Putnaik calculates approximately $45 trillion in today's value, 17 times Britain's current GDP. But numbers miss the human cost. India's shipbuilding vanishes. Ironworks close. Forests stripped for railway sleepers. Farmers coerced into opium and indigo, cash crops for British trade, not Indian food. 1876 to 1902. Famines killed 20 million Indians. During those years, India exports millions of tons of grain to Britain. Food that could feed the dying ships abroad. Export revenue trumps human life. Cruelest irony? India funds the empire's expansion elsewhere. Indian revenues pay for British wars in Afghanistan, Burma, Africa. Indian soldiers fight on every British front. Their wages? Deducted from Indian taxes. The empire runs on Indian rupees while Indian villages lack coins. The pattern persists. India gains independence inheriting wreckage, literacy under 2%, chronic malnutrition, devastated industries, empty treasuries. But the world India enters isn't free, it's financially globalized on the same principles the empire pioneered. Structural adjustment replaces home charges. Debt servicing replaces tribute. Same direction. Value flows from poor nations to wealthy ones. Today, developing nations collectively transfer over $200 billion annually to wealthy economies through interest and profit repatriation, more than all development aid flowing back. India's GDP share collapsed from 22 to 25% in 1700 to 3.8% by 1952, while Europe's exploded. That wasn't natural. That was engineered. The empire lowered its flag. The spreadsheets never stopped running. The ledger never balances. But here's what accountants couldn't calculate: resilience. Despite 2 centuries of looting, India emerged determined. Post-independence, nationalized industries, reformed currency, invested in education despite impossible odds. Slowly, painfully reclaimed what was taken, through reinvention, not revenge. Today, India ranks among the world's fastest-growing major economies, 4th largest by GDP. But recovery from 3.8% took 8 decades. Recovery takes generations. Extraction is instant. That's the brutal arithmetic. Scars remain visible. The wealth gap between global North and South still traces old colonial routes, digitized, financialized, unchanged. Nations that extracted remain wealthy. Nations extracted from remain poorer. Which raises an uncomfortable question. When extraction rewards more than creation, when taking profits more than building, can anyone truly be free? The accountants won. The British conquered India with double-entry bookkeeping more than rifles. They made subjugation a line item. Made tribute look like trade. Convinced the world extraction was investment, impoverishment was modernization, famine was market correction. The ledger opened in 1757 is still being reconciled. Different names, newer tools, same extraction. Empires don't end. They offshore. Rebrand. Move from land to ledger, soldiers to shareholders, conquest to contracts. India's story proves it. What Britain built wasn't just a colony. It was the prototype of modern global capitalism, where value flows upward through invisible mechanisms of credit and trade. Ships that carried silk now carry data. Banks that financed empires now finance development. Profits still move the same direction. We just don't call it colonialism anymore. We call it efficiency. Integration. The global market. History doesn't repeat. But balance sheets rhyme. And somewhere in a London archive, there's a ledger with India's account marked settled in British ink. But some debts aren't measured in currency. Some accounts never balance. Some thefts are too vast for any audit. The empire fell. The mathematics survived. And that might be the most terrifying legacy. Not that they conquered, but that they taught the world how to make conquest look like business.